what's going on, everybody? Monday, May 3rd. Sent out the new issue of MMT Trader. Go to my website, pitbulleconomics.com, and sign up for a 30-day free trial. Check it out. So I've been talking a lot about this. I mean, everybody's very focused on the Fed and monetary policy. And that, like yesterday I said, that's just looking in the wrong direction. All right? And yesterday Warren Buffett said that low interest rates have been transformational for the financial markets. Again, it's just like completely ignoring this unprecedented, historic fiscal that we are seeing. I talked about the $6 trillion in personal saving. I mean, these are monumental numbers. And the fact that everybody's focused on the Fed and monetary policy, I mean, it just kind of shows you they really don't understand the function of the Fed, the role that interest rates play in the economy as a price-setting function. So, I mean, that just leaves opportunity because, that's how you can make money off of other people's ignorance. Now, I'm not trying to be cocky. I'm not trying to be smug. I'm not trying to say, I'm better than Warren Buffett. I'm saying in my understanding of these things, like obviously he's one of the richest guys in the world. He invests in stocks on a value-oriented basis. He's been doing this. He's almost 90 years old. So, I mean, fine. But the thing I really want to talk about in this video is, you hear a lot of comments about interest rates are artificially low. All right, I hear this all the time. People saying interest rates are artificially low. The fact of the matter is that the zero interest rate, the 0% rate, is the natural rate for a country that is a sovereign currency issuing nation where all its liabilities are denominated in its own money. It is the monopolist, it is the issuer of the currency. The currency gets its value from the need of the users to settle tax liabilities in that currency. The country does not have to pay an interest rate on its sovereign money that it can issue without limit. The zero rate, for two reasons, is the natural rate. One reason I just mentioned, there's no reason for the country to be paying interest on its own money that it has the ability to issue without limit, and which people need to satisfy tax liabilities. Okay, there's no reason to be paying interest. And I'll get to, what the payment of interest means. But the second reason that the natural rate of interest is zero is because as the government spends, that cash just piles up, those reserves just pile up in the banking system, creating a natural tendency for rates to gravitate towards zero. Stephanie Kelton explains this in her book, The Deficit Myth, but it's long known among MMT people that, that's the whole thing. I mean, we've seen this unprecedented expansion in the monetary base and rates continue to gravitate towards zero. It takes effort to keep a positive rate. That is really artificial. I mean, in order to keep a positive rate, all right, the Treasury and the Fed combined have to work to drain reserves out of the banking system to keep the rate positive, or the Fed or the Treasury has to pay an interest rate. Otherwise, it'll just gravitate to zero. So here's the other thing. Any rate that is not zero, any positive rate, all right, whatever that is, 25 basis points, 50 basis points, 1%, 5%, 10%, any interest rate that is positive is functionally a fiscal expansion, a fiscal support, all right, all else equal. Now, the question is, who does it go to? I mean, when the government pays interest on Treasury securities, I don't know a lot of poor people or even that many, working class people who own lots of Treasuries. So I mean, that is a fiscal support mainly to institutions like banks and financial institutions and wealthy people. But there's, make no mistake about it, that is a fiscal support. It's just channeled to a sector of the economy or a portion of the citizenry that, frankly, I don't think really needs it. Okay, you could have fiscal support directed, like I talked about, the $6 trillion in personal savings because of the stimulus checks. I mean, I'd like to see more of that, where people get some money and they don't have to go crawling to the banks, begging for loans and having to pay fees and interest. So any positive rate has to be maintained. It takes work. It takes effort. All right? Otherwise, the rate's going to gravitate to a zero. And a negative rate, like we see negative rates in Japan, we see negative rates in Europe. I mean, we've seen them temporarily from time to time here, like on the repo rate goes negative. Negative rates, that's fiscal as well, but that's fiscal like a tax, okay? That takes income away, that's what a tax does. It takes income away. All right, so only when the rate is zero are we talking about the natural rate of interest. If the rate is positive, all right, that is a fiscal support and it has to be maintained. Okay, that's artificial. If it's negative, that is like a tax, also would come under the umbrella of fiscal policy. That's a tax, and that has to be maintained, all right? The central bank literally has to charge banks and depositors on their money. It takes it away like a tax. So, I mean, when you hear people saying that low rates are artificial, they're not. The zero rate is the natural rate of interest. I hope this clears it up for you. Think about it. I mean, it's just logic. All right, that's it. Don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. And subscribe to the channel if you haven't already. If you have, thanks a lot. Leave your comments below. And I'll see you tomorrow. Bye.